Hello guys, welcome back. We are still doing the question 2 of November 2017. In the last video, we did the production cost statement, which is 2.1.1. And then in this section, we're going to be moving to doing the abridged income statement. So let's dive in. So prepare the abridged income statement for the year ended 28 February 2017. So the first step obviously would be to find out what the sales are and then get the cost of sales. Then after the cost of sales, you calculate the gross profit, and then you add your incomes and your expenses, and then you get your net profit for the year. But this one is going to be a bit short because it's much more straightforward, that it goes straight into the costs and takes everything out, and then it becomes much easier. Okay. So, and also they've given you the whole structure here, so you wouldn't have to worry about the structure. So let's see how we can calculate sales. So they've given you the information already here. They said 8,000 tables were sold for 4,080,000. So you just go for your sales, you know that it's 4,080,000. And then after that, we'll need to calculate cost of sales. So in order to calculate cost of sales, in these types of examples, the way to calculate cost of sales is obviously to take the opening balance plus purchases. In this case, the purchases would be the units that have been produced this year, and then subtract the closing balance. So let us look at the opening stock of finished goods. It's 336,000, and then the purchases is obviously the total cost of production. So so the opening balance, so opening stock would be 336,000, and then we would say plus 2,376,000, and then we'd have to subtract the closing stock. So in order to find the closing stock, so what they've told you here is that there's 400 tables remaining at the end of the year. And they told you that it's the Fifo method. So the Fifo method means that the last units that came in are the ones that are remaining at the end of the year. So the last units that came in are the 7,200 ones, which had a cost of 230. What we assume here is that these other ones here, which were there at the beginning of the year, were sold out, and then you're left with the ones that are costing 330 each, as opposed to the ones that cost 280 each, and you have 400 of them. And so in order to get the closing stock, you would say 400 units and multiply that by 230. We'll put in two brackets, and then your amount would then be so you have an amount of 2,580,000, and then your gross profit you'd calculate as so it's a 4,080,000 minus 2.5 million, so the 80,000 will cancel each other, and then you have 4 million minus 2.5 million. That should give you 1.5 million. So that should give you 1,500,000 for gross profit. So that's your gross profit. And then we move on to administration costs. So when it comes to administration cost, let us go and calculate it. So we've been given the administration cost as 148,400. And then we're given some information here that also related to administration. So we're also going to need then to do a split here, because what we did here, we should have allocated 20% to administration, but instead we used the ratio of 2:1. So let us see how much that we included in administration. So what we included in administration would have been 126,000 multiplied by 1/3, and that would have been 42,000. But what you actually should have included is 126,000 multiplied by 20%, sorry, multiplied by 20%, which would have been equal to 25,200. So what you need to do then in this case would be to take the 148,400, subtract the 42,000 that was not supposed to be included, and then include the 25,200 that was supposed to be included. And then you'd have the administration cost would be 148,400, and then you'd subtract the 42,000, and then you would add the 25,200. Similar to what we did when we were doing those factory overheads, because we subtracted the 84,000 and added the 100,800. And then the total then you would get would be 131,600, and this should be in brackets. And then after that, you will have a selling and distribution cost. So when it comes to the selling and distribution cost, we have been given a selling and distribution cost of 422,000. And then we're given information here that payment that was made to pay for wood factory to be brought into the factory was instead included in selling and distribution, and therefore we just need to subtract that cost. So we'll literally just say 422,000 minus 102,000, and then we'd get a balance of 300, sorry, it should be in brackets, 320,000. And then if you say 1,500,000 minus 131,600 minus 320,000, it will give you a net profit of 1,048,400. And that brings us to the end of our lesson on the abridged income statement. In the next lesson, we're going to be looking at 2.2, still looking at manufacturing. Cheers, guys. See you on the next lesson.